Okay, so your out of consensus view is that the Fed is done cutting rates. The Bank of Canada has already said it's done cutting rates for now. It's done that it can do.
Yeah.
Do you agree?
It's effectively said that. Of course, it also did say, with the usual caveat, if things change, then we would adjust accordingly. But for all purposes, yes, it has. So I disagree with that view. I think that the bank will end up cutting at least twice more before the end of the first half of 2026. So the Bank of Canada will cut twice by 25 by June of 2026.
Why?
So I think there's a few things going on. First of all, I think the housing market in Canada is having a few issues. I think we're in for a rough reset year in 26. We've already had a relatively rough reset year in 25. I mean, you can kind of look at where home prices are, where supply is, all those things. I don't think it gets...
just to underline that, we just got a read of Toronto home sales plunging 15% from last year.
Yep.
Condo sales plunging 22% from last year. Yeah. So it's happening.
That's right. Very little is moving, whether it's new build or existing, whether it's condos or single family homes. Things aren't moving, and I don't think that's going to magically get better in the next 3 to 6 months. I think the risk is that gets worse. So there's one. Second, population growth here has effectively hit a brick wall. It's not all about immigration, but a lot of it is immigration. We were running at about 2.5 or 3% population growth here not too long ago, and we're effectively running now close to zero. When you have that happen in an economy in a relatively short period of time, it has an impact on the consumption numbers, has an impact on everything in the multiplier effect. And I'm concerned that we haven't seen the beginning of that impact yet.